Good morning, good morning, good morning. Welcome back, everyone. We are starting it off with Dixie over here on a weekly time frame. I wanted to point out a few things that I know the markets are going a little wonky right now, but Dixie does look like it has put in its bottom. We are looking at a rounding bottom here, kind of similar to this. So Dixie going to the upside is very likely to me. RSI also is confirming we have kind of put in our local low, and we're looking to test resistance probably into that 105.50, 106 level. When this gets its upside, we should see downside on crypto and tech stocks. A few things to be aware of. Today we have payroll numbers. We're looking for 150K. Anything above 150 is going to be good. This weekend, we should be getting decisions from the Bank of Japan if they are going to continue their negative interest rates or not. If they do remove negative interest rates, that will be a huge hit to dollar, because then the government and the population of Japan have no reason to outsource their investments. They can do it domestically and not have to worry about negative interest rates. So just be aware of that moving forward. What else can I point out? Well, that's basically it. We're waiting for December of our ECB confirmation that the FOMC will follow Europe in either cutting or holding interest rates the way they are. We're gonna have to wait and see on that, but that is also gonna put in a big volatile event. Already, ECB has confirmed they're going to start cutting in March, and the market has already started to price it in. We are going to find out from the U.S. government what they're going to do, and that will basically set the pace for next year. So that's all I wanted to show you about Dixie. We are rounding bottom. We are looking for upside. Now let's go to Bitcoin on a weekly, and we're just going to take a quick peek of how we are looking for the rest of this week to close out. Today is Friday. Today CME will be closing and setting in its candle, and we will be basically letting perps close out by Sunday at 8 when CME closes. As you can see, this weekly candle is coming into full resistance test of this doji candle. This was the bearish order block doji that actually set the downturn. And we are just poking into that right now between this wick and that body. Until we claim this candle here, I am not looking for further upside. Until this candle is claimed, this level can be a local high, and we can look for a retrace back into the previous order block of 36,000. Find some support here and then look for upside. I know I was looking for 32K, never came. Now we're going to move it up to 36. And then we can even move that to 38 if you really want to be, a little bit front running of trying to get that dip. Keep in mind that also on a weekly time frame, we are in overbought condition. So yes, poking into that order block makes sense. But once we do poke in, and if we reject from it, the pullback retrace is going to be a little scary, mean. You can see in the past when we come out of bullish control zone, this was the first pullback here. Okay, then we actually continued back up, huge huge blow off of the shorts, and then another dump, and so on. So something of this nature here can come over here first. Once we take out this resistance, then we can come for these higher levels. Okay, but let's go level to level. Aside from this 45,000 psychological number, I'm looking for 48,000. I've said that to you guys multiple times before. Until those levels are claimed, I'm not looking for higher. But between 48 and 45K, we could definitely consolidate sideways in this piece of shit candle here. So just be aware of that, that once we get into this candles territory, inside that candle, we can consolidate before the next breakout. Inside that candle, we can get a little bit of a retrace and make a bullish control zone and then break out. And then the retrace, since we're right here, okay, the retrace, first I would look at the candle body, which is around 40K, and then the previous candle before that here at 38,300, this doji over here, a lot of people shorted it and got trapped in this impulse. These people want to get out. Eventually, they're going to have an opportunity when they get tested. This is where you want a long scalp if we come into this level, because these people trying to get out might not get out. Market might give them an opportunity to break even or like take small loss and then just pump back up. The retrace, the retrace and this bull flag diamond consolidation, if we build it, the higher the one-to-one extension out will be. This right here is, in my opinion, just one Elliott wave. Okay, this could be one, this could be two, this is three, here's four, this is five to me. Five, we're gonna get 6, 7, and then we can consolidate sideways and start a whole new Elliott wave count for the bull run. But all we're doing right now is retesting where we broke down from on a larger time frame, if you look at that. Okay, so that's all I got to say about Bitcoin on the weekly. Let's go to ETH. Oops, let me close my short. I shorted ETH. There you go. Short closed. Okay. I am in no more positions. I will talk to you kindly now. Sorry. The ETH weekly, I was shorting these wicks. Okay, so I took a quick short at 23.70 and like took it out at 23.68. I'm not trying to be that courageous right before jobs report. You know, normally you don't trade before jobs report. You let the report hit, give it an hour for the world to digest it, and then you can trade the reaction. Also, it's Friday. You don't want to put on too many crazy positions on Friday before the weekend. And we know that we're expecting that Bank of Japan news. So this weekend is going to be weekend warrior mode where you're going to be scalping ranges and look for a breakout. If the breakout comes, you don't want to be on the wrong side of that impulse candle because it's probably going to go all the way into Sunday when CME opens, the new weekly candle on on Crypto World opens. So you saw Bitcoin's weekly candle. We're still in bullish control zone. Next weekly candle is supposed to open, look for the new high, and then reverse if it wants to. So here's ETH. ETH is doing the same thing. We're fighting this new order block over here, this little doji. We're coming into that candle. I think the body of that candle right here is probably going to give us a little rejection here at 2,500. It's okay if we get that rejected at 2,500 as long as we don't lose the support back at the bottom of the wick at like 23. 2,300 is new support moving forward until we hit that $2,500 target. This weekly close, which is going to happen in 2 days, is in a bullish control zone outside the Bollinger Band. It'll be looking for a new high before it rejects and rolls over. I would be very cautious of shorting. If you're shorting, you better be quick. You're shorting in front of a train that's going 800 miles per hour. If you're shorting for those pennies, you got to be quick with stop losses because if an impulse comes, it's going to be breaking fast through. You want to have your stop loss so it's a small loss and you're not caught in an impulse of a $10, $20 move with a large position because you're probably not going to be able to get out of that position. You're going to have to just close it at a loss when the thing stops moving. And that's something that I don't want you to have happen to you while the bull run is coming. Easier would be you to just scoop a DCA on a dip and just let retail do the work for you and let them buy and FOMO and just ride up the price for you to take profit on those impulses up. The impulse, you want to be in the market before the impulse. If you're in the impulse and you're caught in it and trying to get into position during the impulse, you can have a disadvantage of caught in the middle and then you're just stuck as it's going in the direction it's impulsing. So I would prefer you to be in the market and then have a stop loss. If the impulse comes in negative to your trading direction, you'll get stopped out with a minor loss. If the impulse is in your direction, then you can take profit as the impulse is coming down while everyone else is FOMOing in, trying to get into the impulse on the top. You are actually setting a limit and closing out of your trade with no fee and in profit by the retail doing the work for you to close your position by jumping in the market late. You're already in there just waiting to take profit. So that's why I was like, if you get the long over here at like 2,200, you should take that, the bottom of that wick. It's actually pretty decent support. If you look left, this 2,200 now is officially support. 2,150, 2,200. And then if you come into that, that's an easy long scalp for higher. The second you start closing underneath this 2,200 is your warning sign that the upside has failed and downside can come swiftly. This little thing can turn into a head and shoulder. You just put in the head, trap all the longs on the top, and then it will be a dead cat bounce and just roll lower, lower, lower in 3 waves to take out all the over leveraged longs coming into the base of support, almost like, you know, I'm not saying 1,200, but maybe like 1,500 can happen. And then we can just revert right back up, you know, in a big W. And I don't even think we're going to go 1,500. I mean, like, I would be very, very happy with the $1,900 to $2,000 long scalp because I think that's a fair average price looking left. And that would also set in a a right side triangle for this inverse head and shoulder. You know, like a little bottom, a V bottom to like 2100 and then just shoot on up would make logical sense for this uptrend to continue in this channel, you know, uptrend channel. You don't want it to go too much lower than the midline of the channel. If this channel was here, if you can visually see a trend line this way and a trend line this way, you can see the midline right here. And the midline right here is where I would like the retest to come into, from this high into this midline of this channel, which is like 2000, and then just V bottom the hell out of here into the 2500 area would be ideal. So those are the levels I'm looking for. You guys know that, yeah, shorting right now is not the ideal situation. The true short will come with the surprise of the Japanese bank's decision, as well as Fed decision next week. So until then, the market can float on up, because what we're doing is we're pricing in the U.S. government not increasing rates, and then we're increasingly pricing in the fact that the government is going to cut rates in March with ECB. And even if ECB cuts in March and we stay steady in March, that's still good for us, for markets to marinate. Because the second the government does cut rates, more than likely we're going to see a downward reaction. So just be ready for it. Every time the rate cut occurs, it's probably going to be a negative reaction in markets. So that's all I have to say for you guys. If you guys have any questions or concerns, leave it in the comment section below. Please, please, please leave a like, subscribe, press the bell button for notifications if you don't got these already set for your YouTube, because I'll be putting out videos for you guys as markets mature over this weekend. And keep in mind, I am going to be trading this weekend, so if you want to join me for Weekend Warrior mode, feel free to join. It's open to everyone. If you're interested in being a little bit more serious in your trading and want to join members, feel free to join members. It's $20 a month. This is the last month for it. Starting January, we're going to be very, very serious with this bull run. And we're going to be going to $200 a month, because the people who are trading there, we want to ignore everyone else in the market. We don't want to listen to anyone YouTuber. We don't want to see anyone's TA. We're going to be very strict with our trading plan and following it to the T, level to level. So far, everything we've been doing the last few weeks has been working out to the dot. Let's see if we can apply that to a few more assets moving forward. Yeah, that's basically it, guys. If you are interested in joining the members, feel free to join. The link to the Discord is in the description of this video below, alongside all the other affiliate services that I use and recommend that help this channel grow. So thank you so much, guys. Have a great day and trade safe. Talk to you soon. Bye-bye.